Right, so good morning, dear traders. Winston, good to see you, aka Mr. Mayor Forex Trading. All right, so today, before we start trading, there's just a couple of things I would like to go through. First of all, here's what we've done for the month and a half so far. Remember, I opened this demo account and I trade live every day, and it's open to everyone to see. So there's two ways you can go about seeing if a trader is legit or not. Now, because I trade daily, almost every day I go live on YouTube, I don't hide anything. That's one way of seeing a trader. If a trader opens up everything and lets you see everything, even if it's a demo account, it's how I trade, so it's open for everyone to see. And number two, if a trader can show you his FX book and and he's got a track record and he's open and he trades live, that is a good trader. That is a trader you can follow. That is a trader that you can learn from. There's a lot of these people that put little videos on of their winning trades and then try and sell you shit. That's what this channel is for. That's to try and combat those people, because majority of those people that do that, they are scammers and they are scamming you. They post videos of these big houses and these fancy cars they drive, but that is bought by your money, not by trading. They don't do that by trading. Don't fall for that shit. That's why I started this YouTube channel, and I'm asking you to help me grow this YouTube channel so we can get, especially beginner traders, to follow the right people and learn from the right people from the start. Because if you follow those other channels, those people that post winning trades, and that's all they do, only post winning trades, you will never see them trade live because they can't fucking trade. So please, I'm trying to get people to get mentorship from the right people. Find someone that trades live and is not afraid to open up everything and show you everything. And my channel, I'm not going to sell you anything. I'm not trying to sell you anything. I just trade and I go live and I trade my way of trading. And if you learn something from it, I'm very, very happy. All right, so that's what my trading channel is for. Real trading, no bullshit. All right, let's quickly go through this history of this account. Now, I opened up this account on the 22nd of the 7th month, so it's 22nd of July. I opened up this account, I made it a $10,000 account, and I started trading live. I went live on this account, so here it is, in basically a month, and a little over a month, because it was the 22nd of July. So it was the whole month of August, so a little over a month. We now on the 2nd of September. Remember, I'm in South Africa, so it's South African time. And in the little bit of a month and a half that this account has been opened, here's all the trades I took on black and white. No bullshit, I can't lie it, because there it is, open to all. On this account, basically in a month's time, I made 4% gain on this account. We had 486 profit on this account within a month and a half. Now, as I explained in my previous videos as well, a good trader, any trader, you should aim to grow your account at least by 1% a month. 2% is good. So that's what you should aim for. These people that say you can grow your account by 50% or 100% or 80%, and in the videos also I told you, be careful, and that is not realistic. It's not realistic. You cannot build an account with that expectations on that account, because you are going to set yourself up for total failure. Today also I'm going to react to a video from one of my favorite traders, Trader Nick, where he speaks about a trader that's been flying high for too long and unfortunately crashed and burned. And it is absolutely disastrous. And you can see how quickly, I'm going to show you in this video, how quickly you can lose everything you've worked for. You can lose. Even professional traders get it wrong and blow their accounts. And it's not just their account that they've blown. It is an absolute shit show within the trading community. What happened, I'm going to explain to you guys in this video. Stay tuned. Don't skip. You don't want to miss this. But anyways, let's go through this quickly. This account that I trade on every day live, open for everyone to see. I take trades live on YouTube, so there's no altering or no bullshit or no nothing. Now, so on this account, in basically a month, we've grown this account by 4%, which is good. But remember, you don't grow your account every month. Trading is not the same every month. Trading conditions, the markets is not the same every month. So you will not make 4% every month. Some months you'll make less. Some months you'll be in the red. You won't make any money. You'd actually lose money. The only way to check this account is after a year of trading on this account. We can start seeing a pattern and then get an average of what you make a month, of what we make a month on this account. All right, so far for the first month, this account has been opened. It's nice. It was a 4% gain on the account. Plus the markets was heavy. You know, the dollar went through a shitty phase. So it wasn't easy trading. The markets was difficult. A lot of traders actually lost money last month. So for us to make a gain of 4% is good. All right, so 4 months, month and a half, the profit is $486. So this month so far, what I've done, I've taken, let's go there quickly, the 8th month. So what I did by the 15th of the month, let me just get to the 15th, there it is. The 15th was the last trades I basically took, and in between the 15th and the 28th, I opened up this account and we spoke about it. If you go back on my previous videos, you will see we spoke about it. So since then, for the new month, what I've done is I've taken 1, 2, 3, 4, 5 trades that I have taken so far. So of these 5 trades, it's this one here, which was a losing trade. It was a buy on the gold. It was a losing trade, $47. And then on the 28th, the same day, I did a sell on the gold, which was a little sell, $4 gain, so $4 profit. Then after that, on the same day, I never basically take so much trades on one day. It was an odd day. That's why I had another loss of $54, and that was a sell on the gold. Now, as a trader, as a day trader, a swing trader, when markets go into ranging, if market is ranging, which basically means it's moving sideways, it's difficult for a trader a swing trader to actually make profit, you know, because the markets doesn't react the way you are used to it reacting. So there was another loss of 54, but on the 29th, that's the day after, I reconvened. I had a good check and I checked the markets. I took a quick buy on the market. And it was an $18. I'm going to show you on the thing now where this is from. There's an $18 gain, and then I took another trade. This was on the 29th. This one was activated. This was a pre-order. I put a pre-order in, and it actually picked me up and did my take profit without me even knowing, because I didn't check the markets on Friday. So Friday I didn't trade. I don't usually trade on Fridays. But yeah, some Fridays I do. And then this trade went perfectly. It picked me up and it put my take profit all in one day without me even knowing, because it was a pre-order. So that was another gain of $123. All right, so let's go to the markets quickly. And then after this, I'll give my reaction on a professional trader that lost basically everything he had. Oh, man. All right, first let's have a look at the euro yen. So the euro yen is in a ranging market. So what I'm waiting for is for price to either break the top or break the bottom. Then I'll probably go for a trade, but I won't actually look for a sell order close to this support here. But when this starts moving, I'll start talking about it. The euro USD is a trade I put in this morning quickly because all my criteria for my way of trading was met. I trade on a 6-hour time frame. Only the forex, the like the euro, USDs, and that I trade on the 6-hour. The gold and stocks I trade on a 30-minute time frame. Okay, so before we get to the gold, let's just quickly run through this. Now, we did see this, the recent swing low was here, swing high was there. The swing low got broken by this one over here. The previous swing low over there got broken. There was a retest. Now I was waiting for this low, the new low, to be broken. And it got broken, so I did put my sell order basically in on this line over here. So it picked me up for my selling position. I don't think it's going to work out properly because we are close to a very significant trend line over here. And I'll explain that trend line also in this video to show what it is. So you might see a little short run to the downside, but I'll do a trailing stop loss as well on this one. So I'm currently in this trade. You can see the Euro USD, and I just entered this trade over here. Okay, so the pound USD the same. There was the previous low. The previous low got broken by this low over here. So this low, the new low over here, also got broken. What I'm waiting for is a break of the previous low or break of the previous high, a retest, and then a second run. So there was the previous, I'm just going to mark it so you guys can see it. There was the previous low. That previous low got broken with this candle over here, and it formed a low, did a retest, and now it's gone for a second run. So the second run broke that recent low. Now, once that is broken on this line, I'm going to put a pre-order in there, a sell. Everybody wants to take it. There we go. It's a pre-order that I put in now on the tippity top of, or the bottom of that second run of the initial candle that broke the previous low. So let's put a stop loss quickly. I'm not going to put a take profit because I'm going to be doing a trailing stop. All right, so we can put that basically above there. Once that at 48, that's 100% fine. Now look, on a market of it, on a $10,000 account, your risk shouldn't be more than 1% of your account. You should try and actually limit yourself to only 0.5 or 0.5% of your account. So if you have a $10,000 account, you shouldn't risk more than $50 a trade, maximum $100 per trade. I'm just going to put my face on so you guys can also see as I'm explaining this. I just want to put my ugly little muck on there. There we go. 100%. I'm going to move this one up to there. So 100% fine. So you guys can see me as I'm explaining this. All right, so you should try and not risk more than 1% of your account. 0.5% of your account is the Goldilocks zone. So that's why my risk here is $50, and you can see my stop is it's a very wide stop. It gives me more than enough space to breathe, and then I'll just do a trailing stop and see if this goes all the way down. I've got this feeling it's only going to go to this support over here, or maybe this major support down here. But to get there is going to take a lot for this market. So my trade there is in because it met all my criteria of how I trade. Okay, let's go to the US yen. Exactly the same. It's in a ranging market, so I'm going to wait for either this high or this low to be broken, and then I hope it breaks the top and it starts going back to the upside, because unlike the US yen, it's usually just an upwards momentum. So if I can catch it on the low and just follow it all the way to the upside, this might be one of those long trades, one of those beautiful, beautiful long trades that just happens to take me along with it for the ride. All right, so I'm just waiting for a break there to the upside, and then a retest, and then a second run. All right, so let's go to the gold. Now, what happened in the gold, not there, I'm going to put the trade here. I just want to explain to you guys quickly what happened. Now, this was this $18 trade there that was in. Here was that losing one that I lost. I put a sell in there. I don't know why. I've got no idea why I put a sell in there. But anyways, I did. And so that's that $45 loss. Then I put this is that small buy. I saw a break of structure, and there was a second run and a retest on that second run over there. That's why this trade got picked up, and I moved my stop loss to there, the trailing stop to there. So that's why I got stomped out in the profit there for that profit. And I did put a pre-order in there. The reason I put a pre-order in is because we are in a ranging market. As you guys can see, we're there, then we're there, then we're there, then we're there. You know, we up and down in between these two, between the green and the red over there. There's support and there's resistance. So I put a pre-order in, a sell, on this line over there. This was when price was still here, when I was still busy. I just want to put a pre-order in and I take profit down there. So this all happened, I think, on Friday. It took me out there for that $18 profit, then came right back up, put me in the market because I had a pre-order in here, right at the tippy top there, put me in the market, and was just a ride down. But this I missed. I didn't even notice that I got picked up or that I got, taken into a profit. I made money there without me even knowing it. So that's what that happened. That was a pre-order. I put a pre-order in. And now, this is not trading per se. This is just expected trading, basically. So because we're in a ranging market, so I'm expecting markets to go up and down from here. But we do see that the gold has broken through this little support that has been keeping here for a while. It's been in the support area. It did break through this support. Let me just mark it on the right place so you guys can all see. Where's that low? There it is. Okay, so it did break through this little support over here, which make me think we might see a run down to this major support over here. This is another major support right over here. I'm just going to mark it off so it's there, which is actually, if you can see, the true range and extent of this sideways momentum market. So if gold decides to get to this zone over here, I might take a stab at it and take a buy on the gold. I'm not necessarily going to try and take a sell on this now, because yes, we are still at the support zone over here. If you guys can see it, I just want to mark it properly so we can all see this. I'm going to take this one over here. I just want to mark it properly so we all can see that this is also still technically a support over here. So it is still in the support zone. It found some support, so I'm not inclined to be selling at this moment. I'll wait for it to get to this zone over here, the $2,476 mark. Then I will look for some buying opportunity. So what I'm going to be waiting for is for the high to be broken, a retest and a second run, and a break of that previous high that broke the original high. Okay, basically that's what I'm going to be waiting for. So gold, nothing for me here yet, but I will be keeping a close eye on it. Alright, so let's put that off. Okay, so ladies and gents, I just want to put a quick react to Donvo. Now Donvo has been trading for a couple of years. He's also got a YouTube channel that he's been trading on, and then he has people that follow his trade, basically. So I'm going to have a look at Trader Nick's account, or Trader Nick's video that he put out last night on Donvo, and I'll give my reaction, and I'm going to explain what I think the main thing is with this account. Alright, so let's quickly have a quick look at this one. Now, this is Donvo, a very successful trader, very successful trader, but he is one of those traders that is on a trading platform. Look, I'm explaining it as plain as I can. I'm not going to use technical terms, and he's a follow trader or a map trader or whatever you want to call it. He's on a platform where other people connect their trading accounts to his trading accounts. So all the trades he's taking basically happens on their accounts as well. So it's basically people that don't trade themselves. They don't trade. They just do follow trading, but it's all automated. So their trading accounts is hooked to his trading account. So all the trades he takes automatically gets executed on their accounts as well. And let's say he's got 100 people, 100 accounts connected to his account. Now, Donvo was one of those, in my mind. I'll check some of his videos. A couple of his videos, but one stood out for me now. Is, in my opinion, one of the traders that got too cocky and too confident and too sure of himself with his trading style and his trading method, and you are sure to burn yourself if you don't stick to your. I stick to risking only 0.5%, maximum 1% of my account. I stick to it, and that's the way I do my tradings. I stick to it. I don't over leverage, I don't over risk, or I don't go too bigger risks, or I stick to it. Religiously, I stick to it. And here's the reason why. Let's have a look at Trader Nick quickly and at what he says, and then we'll go from there. But I'll explain it as we go along. I hope the sound comes through nicely. Let's just have a look quickly. I just want to have a look.
James here, just talking about this. You can go check out his channel if you want. Forex James, if you want to go check out his full video. A lot of people are talking about the situation with this gentleman Donvo, who has been a long-term live streamer. I think he started streaming like maybe a year or two after me, and I feel like I've been around in the trading space streaming for a long time. I haven't been as long as like Raja, but you know, there was back in the day, there was a handful of streamers, and we all knew who each other were. So Donvo, who used to go by, I think it was Controller FX, has been a pretty notorious live streamer, and he had actually a account service, or a PAM account, which is basically the idea is investors could plug in and they would automatically copy over the trades that Donvo was taking into their own trading accounts. And in this video, I just wanted to discuss
things, kind of my thought, my reaction to this situation. First of all, if you're somebody who is negatively impacted by this situation, that really stinks, and I can imagine you're probably really kicking yourself at this moment. I'm sure there's a lot of people looking for answers, hoping that there's some sort of resolution.
Okay, so let's have a look.
From what I know, Donvo has not published any sort of response or statement on this, and there's speculation all over the place about this. But first of all, let's just take a look at.
So what is ClickUp? ClickUp is an all-in-one productivity
So
software
let's just have
where you
this
can manage
ad playing
everything
quickly,
and anything
and then
related.
we'll continue on with the thing.
Some of the damage, if you will. So you had, I just pulled up a couple accounts. So a lot of the people who had been plugged into this PAM account have been kind of sharing their.
So let me just explain quickly what a PAM account is. A PAM account is, like I explained to you in the beginning of, before I started this video, is where a lot of other traders, people that's got trading accounts, connect their account to Donvo's main account. So it's called a PAM account. So every trade he takes automatically gets taken on your account as well, without you even having to do anything. That's called a PAM account. So basically, it's people that either don't have time to trade themselves, or they're just too lazy to learn to trade. So they want to piggyback off other traders. Now, I personally don't think it's a good idea to not trade yourself. If you want to do the trading thing, okay, either you can go to a broker, or you can go to companies that do trading or something like that, and works with your money. 100% fine, those are professional, but you have to go to professional companies that are registered with the right entities and so forth. Yes, but whenever you invest your money into a single person, you have to remember you run the risk of losing all your hard-earned money, all your money that you've invested into that person. Personally, I will never let anyone else trade for me. I got into the trading game a couple of, like 8 years ago. I got into the trading game where I saw people trading. I was looking at YouTube videos, and it's just a feed that came onto my computer onto my YouTube as I was scrolling down through YouTube, and I saw that, hey, this trading thing is quite nice, and it looked interesting to me, and I saw an opportunity where people are making money. So I started doing research into trading and what it is, what it's all about, how it works, what it is, and then I started watching YouTube videos to gain knowledge. Before I even opened up a trading account or did anything like that, I did about 2 months of hard research on what exactly trading is and Forex is and all those things and the markets are, so I can familiarize myself with what it is that I'm looking to do. And yes, I did read through the PAM accounts, how you can link your account to other real traders or other people that trade. And I thought to myself, you know what, it's just the kind of person I am. I'm not going to basically, I just want to take a listen here. Okay, yeah. I'm not going to let someone else trade with my money. If I do something, I do it myself, and I like to do it that way because then I've got full control over my money, and you know what's happening to your money. Look, when you work with your own money, you work damn cautiously. You don't just go crazy. But if you work with someone else's money, you know, risk flies out the window. You know, it's like, oh, well, it's someone else's money. It's not my money. So, it's, you know, you take chances. All right, so that's just what a PAM account is basically. It's just where other people hook their account onto this Donvo, onto a single trader's account, and whatever he does automatically happens on your account as well. That's PAM, and I'm fully against that. If you want to trade, learn to trade yourself. Work with your own money. Anyways, let's continue on.
What happened to their accounts, so that we get a better idea of.
Like, look, this is one of the people that hooked onto his account. So you can see it was a nice $54,000 account, and then bam, something happened, and they lost $53,000. $53,000, and this happened over, like I heard, in a span of 3 days. So imagine waking up one morning knowing that you had $54,000 in your trading account, and the next minute when you open up your trading account, you see you have lost 95% of that money in that account. And it wasn't even you that lost the money. It was someone else that lost the money for you, because you put your cash or your money in someone else's hands. You know, this is the reality of trading. This is the reality of trading. But anyways, let's quickly continue on. You know, when you get that pain, down the, yes, yeah. This is a kick in the nuts. This is a serious kick in the nuts. I would cry. I would cry. I would laugh. I would have suicidal thoughts. I would definitely go and join the circus. And I don't. It is. This is a kick in the nuts. If you lost $53,000, you know. But anyways, let's continue on.
What went down to cause a 95 plus whatever percent crash in all the portfolios following, or the accounts following the main account. And it seems like the pretty consistent theme is that, you know, people are losing between 95 plus, you know, percent of what was in their account in just a few short hours or a few days. I'm not exactly sure. This one says 3 days. I've seen different figures, but you can see that this particular individual's account went from somewhere just shy of 55,000 to losing $53,000, which is insane. And from what I know about Donvo, I'll just give you my 2 cents, because I haven't spent a ton of time watching him, and I don't want to mischaracterize him or say something that is not correct. So if you are a Donvo fan or follower, if you spent time in his thing, please correct me if I'm wrong. but I believe he is a big fan of trading gold, and that's one of the popular reasons why he's big on YouTube. A lot of traders love to they love to trade gold and watch gold. The other side is that he has a pretty notorious take on risk management, where he's not super.
I just want to. I mentioned it earlier now in the video where I spoke about, being in a sideways moving market. Now, for people that trade on the 1 minute time frame, the 5 minute time frame, this is a potential gold mine for them. Because there's a lot of movement. But for people that do swing trading like me and Trader Nick is also a swing trader, it is difficult for us to navigate ranging markets. It's very difficult because the way I trade, anyone that trades basically, that has a trading for days, that's not just quickly in and out the markets, in and out. Ranging market like this here is very difficult to navigate. This might be a nice run for you right over there, but here you see a break of that. That's why I wait for a second run before I put a trade in, because this will look to you like, okay, there's a previous low, this one broke that low, so you might put a trade in there thinking that the market's going to move down lower, and then it moves to the upside, so it's difficult as a swing trader. Ranging markets are difficult to navigate. That's where majority of long-term traders lose money. And if you are in a trade, let's say you are in this trade, you're not stomped out yet. This 3-4 days that the market is moving sideways, you're losing money from commissions and so forth. So if there's no movement in a market, especially if you are a swing trader and you are in a trade and you are stuck in a trade for 3-4 days, you lose money because of commissions. Every day you've got a trade in, you pay commission to your broker. So you need a moving market. You need markets to move. Then you can kind of cancel it out. At least you're making money and you're paying a little bit of commission, so you're still making money. But if you have a sideways moving market like this year, sideways moving market, you are absolutely stuck in this. Let me just go to the daily. I want to explain it to you nicely quickly. I want to go to the daily. Let's have a look at the daily quickly. So let's move closer. So let's say you've jumped in on the daily. You've jumped in here. So you've been in this trade a couple of days, you've been in this trade a whole lot of days, and now you get to this point where it's 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days of just no movement whatsoever. You're still paying commission every day, but you're not making any money because you are stuck in this trade. Let's say you jumped in there. Yes, you are in profit, but now the commissions are starting to eat your profit, because every day that the market's not moving, you still pay commissions. All right, so that's just what I wanted to explain there for you guys. So these people that are stuck, yes, you can exit out of the trade. You can anytime you want. You can, but us as swing traders, we hang on for as long as possible. All right, so just to explain to you guys, so these guys are still losing money. The swing traders, it's difficult when markets are moving sideways. For us as swing traders, it's difficult. I just wanted to explain that before we, as he continues on, I'm just going to explain to you guys to what he's saying, and so you can have a clear understanding. All right, let's continue.
Super, is not like super convinced that he needs to have a 3-to-1 risk to reward or do the standard approach, which, hey, anybody who's stepping out of the norm, there's nothing wrong with that. And at the end of the day, your risk to reward, if you're risking 10 to make 1, that may not work for a lot of traders. But hey, if he had done something where he was making, his own gains, who's to dispute that, right? If someone's got something working for them, it doesn't matter if you're risking 10, 5, whatever. It matters. Your risk reward doesn't matter. Your win percentage doesn't matter. It matters that over the long term, do you actually make money? Now, I will say this: having a really small reward relative to a huge risk, in my experience, and everybody who I've seen who has long-term profitability, is a tricky a tricky approach. I'll say that.
Yeah.
But so I know that he has, notoriously had trade.
Okay, so I just want to explain quickly the risk to reward. So a lot of traders, when they put a trade in, they put a TP1 and a TP2. They put a risk to reward. So if they are risking $50 on the account, they want to make at least either $50 back or $100 back. So it's a 2-to-1 risk to reward ratio, or 3-to-1. So basically, if you risk $50, you want to make $150. You're risking $50 to make $150. Once they get to their target, they go out the market. But it's nothing wrong with trading that way. There's most of the traders trade that way, but the problem comes in with how much are you risking. Like earlier on in this video, and we started this video, I did explain that you do not want to risk more than 1% of your account. You don't want to risk more than 1% of your account. So maximum, I like risking 0.5%. So on a $10,000 account, I like to risk $50. That's my risk limit. I will go down to $100, but that is the max where I push it. You will see on the trade, like in the beginning of the video, I put my trade history on there. And you guys will see majority of the losses is like a $50 loss, $30 loss, $40 loss, in that range, in that range over there. All right, there's one or two that is a $100 loss, but that is the max that I would risk on a $10,000 account is $100. So just to explain to you, risk to reward. Now some traders, they put such high leverage and volume in the market that and they put such a big trade in that when they risk, the risk is then up to like 40% or 50% of the total account that they are risking on one trade, which is a sure highway to what has happened here. It is a definite. Jy gaan jou gat sien. Like they say in Afrikaans, it's a good saying. Jy gaan jou gat sien. You're going to see your ass. Don't do that. Don't ever do that, because you are not trading. You are gambling. All right. So it's utmost important. Pay attention to this video, and I'm going to explain as well. Pay attention, because this is what can happen so quickly. So quickly. All right. Let's continue.
Where he's like risking like 50 in order to make like one, right? So and I'm talking about like percentages or units, etc. So let's get into some more of the damage here. So this was just some records showing. Let me see if I can zoom in on this at all. It doesn't look like I can, but you could see. The point is, I know it's hard to see on the screen, tons of trades all of a sudden happened, and this was what I started seeing, and everybody talking about this, is that there is so many trades that happened, and I've heard the number 300 tossed around. So 300 plus trades happening in a single day.
Yo, Okay, so let me explain to you guys quickly why this is such a disastrous number. 300. If you take 300 trades a day in a single day, that is rough. That is, in my mind, it's unimaginable. As you can see on I'm just going to show you quickly on this. Let me go to the history quickly. I just want to show you guys quickly something here. Let's go to history. Let's see how many trades I took this is basically a month and a half that I've been trading. A month and a half. So that's like, let's say 40 days. I did 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27 trades. In 40 days, I took 27 trades in 40 days. And that's on a high end. This way I put the 3 trades in one day. What was it? It was the 28th, 28th, 28th. That usually doesn't happen. Especially if you're only trading gold. If you're only trading one thing. You don't do that. Yeah, on the 7th, you can see 1, 2, 3, 4, 5, 6, 7. Yeah, it's 1, 2, 3, 4, 5, 6, 7 trades in one day from there to there. And that's gold, 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 silver, silver. And that's that. So I had 2 silvers and then, 1, 2, 3, 4, 5 golds. That is the max basically that I would go on a day. I won't do 300 trades in one day. Never. Like I said, 27 trades in 40 days. It is rough. That is just rough. It's unimaginable. Sorry, but to me, I can't wrap my head around that. But anyways, let's continue on with the video.
For 300 trades, I heard James say this in his video. It was like more trades that he takes in a year. That's
James is another trader also. You guys must go and follow. It's
in fact,
really
that's
good.
Like 5 years of trades for me. I don't take, I'm a swing trader, so I'm not in and out of the market very frequently. I'm pretty, infrequently.
Me as
trading.
well, swing trader.
Actually, the less I can trade, usually the more profitable I am. Because usually, if I'm taking less trades, it means winners are running. And if I'm taking a lot of trades, it means I'm stopping out pretty quick on some of my entries. So usually when I'm taking less trades, it's better. So anyways, 300 in a day is definitely crazy. I also wanted to show you this chart that someone had plugged into my FX book to follow along with the results. And this tells me all I need to know. The account at one point, you can see
63% growth.
63% in a month.
In a month?
And
wait. Okay, so if you look at this now, I'm going to compare it to my trading here. So in our, I'm just going to leave it there quickly. On our, because this trading account is our trading account. It's mine and yours. We all trade on this together. On this trading account, in 1 month, I made 4% gain on this account, and that 4% is good. Like I said, if you start trading, you should aim for 1% growth on your account. If you can do 2%, 100% fine. That's where you should be at. As a trader, is you should try and grow your account by at least 1% a month. Okay, so on this account, in 1 month, we took this account and we grew it by 4%, which is good. Which is like that is good numbers. That is good. If you can stick to that average of 4%, perfect. But remember, you won't because the markets doesn't always play ball. So there are going to be months that you are going to be in the negative. All right. So on this account that we made 4% on 1 month means that I can have so far 3 losing months, if it's only by 1% losing months, and still be in profit. All right. That you have to keep in mind. Trading is you don't work on a daily, you work on a yearly, basically. All right, so I just wanted to show that to you guys. All right, so let's continue on with the video. You're 63% in 1 month. That tells me that he is risking way too much, way, probably over leveraging, and probably now to potential people that hook onto his PAM account. If you see if you see 63% growth, and you can latch onto his account, automatically your mind as a non-trader will be like, fuck yeah, I'm gonna join this guy and I'm gonna let him trade for me, because I put $1,000 in, and in 1 month that $1,000 has grown to $1,600. So you've made $600 in 1 month from $1,000. Fuck yeah, I'm jumping in here. And I want to tell you guys, please share this video as well. Don't do that. Don't ever do that, because if you see that, that guy is, in my mind, that guy is not trading. That is gambling. that is gambling. It means you've completely thrown out risk to reward. You've completely thrown it out. There is no more risk factor. You've just given up on risk, basically. And that is a sure way for someone. Hulle gaan hulle gat sien. Afrikaans, jou gat sien. You just say that with me. Jou gat sien. You're going to see your ass. Jou gat sien. Don't do that. It looks like a gold mine, like for any person that doesn't know trading, that 63% looks like the end of all your troubles. There you go. You are sorted for the rest of your life. You're going to invest all your savings into there. Let's say put $100,000 in there, because you see that $100,000 go to $160,000 in 1 month. No. Don't do that. Don't ever do that, because it's a sure way for disaster. If you see someone that grows their account by between 2 and 5, maximum 5%, that you can still go with. That in my mind sounds okay. Okay, let's continue on with this video. This is just to me it's unrealistic. This is unrealistic. I can't comprehend this. I can't comprehend 63% in 1 month. I can't. I just can't. To me, that's I'm out. Thank you.
In the trading space for a long time, and I know many of you guys who have been here long term probably feel the same way. If you see somebody up 63% in a month, there is no risk management there.
Like I just said,
that is not
the risk is out the door.
The only time that a 63% return in 1 month on your entire account could occur, and it not be gambling or actually straight up just inappropriate risking,
that is gambling
on the account, would be if you caught an ungodly move in some sort of, the VIX or something. Let's say you bought like out of the money VIX long contract, long options contracts, like call options. Let's say you just bought those, and they just, for whatever reason, you just got super fortunate on the timing.
So he's talking about stocks and so forth.
And you had risk relatively small, but the
goes into the
calls
stock
became super pricey, and you got, that's the only scenario. That's the only thing in my head that I can think, like, oh yeah, that would be a possibility of making 63%. But that's clear.
Okay, yeah. So what I wanted to add now to that, so you guys can just understand, when he's talking about the VIX or so, this is the stock market that he's talking about. So, yes, on the stock market, you have a potential of making big money with small risk, with low risk. Like if you invest in a company that you buy, let's say, 1,000 stocks in a company, and the stock value is $10 per stock. Okay, let's work on let's say you buy 10, only 10. So basically, 10 little blocks. I'm trying to explain this so people can understand, because a lot of these traders, like Trader Nick and so forth, they use the right terminology for what it is. But if you are a new trader, you don't understand what he's talking about. So that's why I am here to try and to make it so that anyone can understand. So on the stock market, you buy little blocks, you buy little pieces of a company or a entity or something. Now let's work on Tesla. Let's take Tesla. Everyone knows Tesla. Everyone is familiar with Tesla. So let's say Tesla sells a block, a little piece of Tesla for $10 a piece. So you buy $100 of stocks. So that means you've got 10 pieces at $10 a piece of that company. And overnight, Tesla or Elon Musk has some radical new technology that comes out with a battery that lasts 5 times longer than the average battery or the top line batteries in their cars, because it's an electric car. So which means that electric car, instead of going 300 or 500 kilometers on a charge, now goes 2,000 kilometers on one single charge. the stock value, the value of that company is going to skyrocket because people are now going to invest in that company, which means you bought 10 pieces of that company for $10. Now the value of that company, that $10, the value of a piece has gone from $10 a little block, a piece, to let's say $100 a piece, which means your $100 has now skyrocketed to 100, 200, 300, 400, 500, 600, 700, 800, 900, $1,000 overnight. That can happen on the stock market, but you're still working on a small risk, because when you put the trade in, you had a small risk, like a $50 risk. That's that. You still had a small, but because something happened overnight in that company that boosted that company and people bought stocks, then by all means, yes, you can push. You can go from that $100 to $1,000 in a matter of minutes, basically. That's on the stock market. So just to explain to you guys the stock market. But this guy was trading gold, or he's a gold trader. So the gold doesn't do that. It doesn't go up by tenfold. You know, it doesn't do that. That doesn't happen on gold. So which means there was no risk management at all. All right, let's continue on with the video. I'm just explaining it as we go along.
Clearly not what's happening here, because what you can see is there was, every day it seemed like the count was up a couple percent. And to new traders, this, up to this point, looked remarkable, right? If you're somebody you're like, I want to invest in this right away, 63% a month, that could change my life in a few years. That could in a few months, that could change my life. If you had $10,000 and you made 63% per month, in no time, you'd be like the richest person on the planet. That's why it's not sustainable, and that's why, if you see this to me is incredibly inappropriate trading. Because, and I know, sitting here with a bit of hindsight, and I'm sitting on my high and mighty chair judging someone who's just had their account blown, and it's probably in a really, they probably feel, Don Vo probably feels horrible, but not about Don Vo here. It's about the people who lost a bunch of money in this situation. I'll get to that in just a second. But here's the thing. For a new trader, you see 63% a month, you're like, oh my gosh, this guy is a trading legend. I need to get invested. So you throw your money at it, and a lot of people did. Here's a guy who's been on YouTube for years and years and years. And people, looked up to him and trusted him. And you see 63% a month, you're like, this guy is a beast. But if you know trading well, 63% per month is absolutely not sustainable. It is not even close to sustainable. It is reckless to put on risk that high in order to make that sort of gain. Great traders, the best I know, I've talked about this, and I get flack for this because people don't like this answer, but I'm not here to glitter and glam this stuff. I'm here to tell you the practical truth that I found over my years of studying this stuff. If you can do 5% in a month, you're like the best trader I know. If you can consistently do 5% per month over the long term and average
I just told you guys now.
Month, but if you can average 5%, you're the best trader I know. If you could do 2 to 4%, you're a very, very good trader.
Yes.
And the reason is because of situations like this. It's easy to have periods like this where you have a 60% gain, but what you have to accept if you're going to make those sorts of gains is a high likelihood that at some point in the line, you're going to blow the entire account. So what I'm saying when I say these numbers, I'm saying these are numbers that are more sustainable to very educated traders who are managing risk appropriately. 2 to 4%, I mean, really 2 to 3% is remarkable numbers. That's kind of what I shoot for on my own account. It's like if I can get 2% per month and just compound my account year over year, over the long term, the account is going to make me very wealthy. Right? Yes. That's all I need. I don't need to go fast. I just need to go steady. So anyways,
majority of my videos, you can go back on my live videos. Majority of my videos, I also say, remember, trading is wealth. But how do I say it? It's not an overnight success. It's systematic wealth. That's trading. It's systematic wealth, little by little by little by little. That is what trading is. That's how you become rich or wealthy in trading is by systematic wealth. Slowly but surely. You don't want to try and be a millionaire overnight. And I say it on all my videos, if you want to be a millionaire overnight, you'll have more luck at a casino. Go to a casino, don't trade, and come in with a mindset that you are going to become a filthy rich person within a month. It's just not going to happen. It's not. You're going to actually come out worse at the other side. You're going to come out worse. Like I said, you'll have more luck at a casino. But that's just my take.
Back to the concept here. If you are somebody who is negatively impacted by this, James did a good point. He made a good point in his video. There's two ways that we could discuss this. We could say, point number one, if we're being, and again, I'm using James's concept here, if we're being logical about this, this was a paid-for lesson. This was a tough lesson to learn, but the idea is basically if you put all of your trust and all of your money into somebody on YouTube who is just showing you, that they were the best trader or whatever, then this was a painful lesson to learn. Trading is really hard, and even for YouTubers who have big followings like myself, or anybody who you see with a big following, it doesn't immediately make them a profitable trader.
No.
Someone who is a profitable trader can show you long-term broker statements. They can show you their login. They can show you a MyFX book, whatever. But if they can't, and you still put your hard-earned money into something like this, where you're just copying their account, you're asking for trouble, and it's probably a painful lesson. The second one is this absolutely stinks for people who, and again, I'm using James's points from his video. It actually stinks for people who followed and believed in this guy and just completely had their entire funds wiped out. Now, there's been some speculation that this was intentional. That this was a money grab.
I'm not going to continue on any further onto that. It is heartbroken. It is hardship like you cannot believe it. It is. Some people put their pension funds behind this guy, and it's money you've been working for your whole fucking life. Hard sweat, tears, hard money that you have worked for your ass off to hopefully have a comfy nest egg. And within a matter of literally hours, your 30 years or 40 years of work, hard work, is gone. Gone. Yo, I can only... I feel sorry for the people that lost all their money. It is, and it will take you years to get that back. I feel so sorry for those people. Heavy sorry. But that's the reality of trading, and that's why I hope you guys subscribe to this trading channel and share this trading channel so I can show you how to trade the right way. You have to religiously stick to your risk management. Trading, 99.9% of trading or being a successful trader is risk management. You have to. It is of utmost importance that when you decide to jump into this trading thing, you have to, number one, be patient. Be patient. Wait for your trading opportunities. There will always be a trade. It might not be today. It might not be tomorrow. It might not even be this week. Sometimes you wait for 2 weeks before the things line up to your trading style or to your rules. Stick to it. And when it comes to executing the trade, risk management ties it all together. Don't risk more than 1% of your account. Don't do that. You are absolutely going to ruin your trading, your money, your lifestyle that you envisioned. It will be gone. Yes, it is a slow process, but bit by bit, before you know it, time flies so fast anyways. Ask any person that's over the age of 60, ask them, how fast do time fly? Because time flies. Before you know it, your life is done. Time flies quickly. Don't get sucked in to false promises or false beliefs. And in my opinion, this is just my opinion. Remember, what I'm saying here is my opinion. Don't let anyone else trade for you. If you want to create wealth, create it yourself. Learn to trade, yes. To become a profitable trader takes years. It takes literally years to become a profitable trader. It does. It's not something, trading is not something you can learn in books and then now bam, you are a profitable trader. No. Because especially if you work with your own money, your hard-earned cash, there's a lot of emotion involved. A hell of a lot of emotion involved when trading. And that's what makes a difference. That's what makes it different when you trade. Especially if you work with your own money, there's a lot of emotions involved. So, and that clouds judgment. That's why if you have a trading strategy, like my strategy is a solid one, and I've been using it for years now. I wait for a break of structure, retest, and a second run break of structure, and then only do I put a trade in. And you won't believe how many times that has saved my skin by working that way. And also, if you've got a trading strategy that you religiously stick to, your emotion won't overcloud or overrule your judgment. You go into basically an automatic zone. You go into an automatic zone. So basically emotion starts leaving because this is your trading style. It's been working for you and you stick to it. Your emotion starts going away. And that's where the most people make their mistakes, is having the emotion, they don't have a proper trading strategy that they stick to, a trading strategy that they've been doing for years, and then emotion comes in, and that's where you make mistakes. That's where mistakes come in, and you lose trades, and and the more trades you lose, the more money you lose, the more emotional you get, and the more mistakes you make, because now you want to get back the money you've lost, so you up your volume or you up your leverage, and then you go down a rabbit hole like this Donvo. You go down a rabbit hole of despair, and you just lose it all. Because the more you lose, the more you want to gain. So the higher your risk goes, and then eventually get to a point where there is no more risk. It's just a free fall. And believe me, when you hit the ground, there you hit the ground fucking hard. So if I can give you something to take away today, from my personal experience, is have a trading strategy and stick to it religiously. If you stick to it religiously, and it is a trading strategy that's been working for you for years, you will make a success of it. But risk management, don't ever. It's like a truck. If you're a truck driver or you know truck drivers, it's like having 40 tons or 80 tons on your ass going down a downhill. You have to have the truck in low gear. You have to have your exhaust brake on. You have to have your reverse oil. You have to have all your braking systems in place, and slowly down that hill. if you try and change gears and put it in a bit of a higher gear because you want to go quicker, you will skip a gear and you will start losing control over that situation. And once you start losing control, you start picking up speed, and before you know it, you're dead in the water. Please, guys, trading is fun. It is nice. Yes, it will create wealth if done right, but it's a yin and yang. It can also just as quickly, and believe me, it's actually, you can lose money quicker than you can make money on trading. Keep control when you trade. Keep your truck in gear. Keep it in low gear. Don't try and change gears going down a downhill. You're just going to lose control. Stick to your trading strategy. Stick to your risk to reward. And do not risk more than, I would say, 0.5%, 0.5% of your account. Please, please don't. But that's all for today. I'm not going to ramble on too much. I just wanted to show you guys, and I just wanted to go through it and tell you guys that even professionals lose control. Please, I religiously stick to my 50%, 0.5%, 0.5% of my account, or 1%. As you can see here, my losses, $26, $30, $34. There is the max. $100 is the max that I would lose, that I would risk on this account, on a $10,000 account. But as you can see, all my losses there is not more than even 0.5% of my account. 34, 24, 15, 15, 47, 54. There is just over 0.5%. So please, don't lose control. Don't change gears. Stick to it. Your risk is of utmost importance. Don't over leverage. Don't go too much volumes. Give yourself room to breathe. Anyways, that's me for today. I'm not going to ramble on too much. I'm not going to take too much of your time. But please, ladies and gents, if I can ask, I'm not asking for anything much. I'm just asking that you guys please share and subscribe. Okay, so let me just quickly run here. Sorry, before I go, I see Euro USD. I just want to move this up quickly. Euro USD, and I've got the pound that's also taken now as well. It's the pound USD, right there. All right, so the pound USD also picked up. I had a pre-order in there, so it put me in the market now. So now I'm in the market. But look, see how small our volumes are, and my leverage are very small, so that I can have room to take my stop loss and put it wide. You need to make yourself room. That's why you trade small lots and small, so you've got room for movement, because this price can still go all the way up to there. It can probably go all the way up to that level over there, and then only start going down. It's all depending, it's all just depending. But you need to give yourself room. All right, so I've got the two trades open in the moment. The Euro USD, what's happening to that? You see that's still going up, but luckily, see there, $51. You don't want to risk more than that. And it's plenty of room for my stop loss. My stop loss is not just right above here, or right just, you give yourself room on your stop loss. And now I just follow it down to the downside, if it does go down to the downside, but I don't think it will go down because of this trend line. Let me just quickly, before I log off, I just want to show you guys this trend line over there and what I'm talking about. Okay, reverse out. I'm on the daily market now quickly. As you guys can see, there's a nice wedge pattern here, and it broke through this trend line over there. So I'm bargaining on the retest of this trend line, and then hopefully to see a nice upward momentum and maybe a break of that previous high over there of the 1.1276. 12726. There we go. Mark over there. So that's what I'm bargaining on. This is a bit of a risky move here, because it can turn around at any stage. It can actually just turn around and start making its way to the upside, and then say that is the retest, and the retest is done, and start moving upwards, which might be the case, but we'll see. I'm bargaining on maybe taking a ride down to this support over here, which is quite a good support, as you guys can see. Well, support, and that's what I'm bargaining on. And then I'm going to wait for the turn, and then ride this train all the way to the upside. That's what I'm waiting for on the Euro USD. Let's go back to the 6 hours. Oh, my favorite time frame is the 6 hours now. I've traded all the time frames, and this is what works for me. Now, this is a bit of a risk. It might not work in my favor, because this might be the pullback right over there. I just want to put a thing on here quickly. I just want to quickly see something. You see, this is right around the 50% retracement as well. So this might be, you know, the last. It might come down to the 75. Might just do there, and then getting some traction and momentum to the upside. So, you know, this might have been a risky move, but this is my trading style. Is how I trade. I wait for a break of structure there, the previous low. Let me just go in there. I'm just going to take this thing away. I don't need the fib. So this is how I trade. So once I see that's the previous low there, and that's the high. Now price came down and it broke this previous low over there. This candle here broke that previous low over there, which means, okay, now I'm waiting for a retest. There's the retest, and then the low of the candle that broke the previous low, that low over there, I'm waiting for that low to be broken. So there's your second run, and it broke that low. Then I put a pre-order in there, and with the hopes it will go down. It might not, because I'm trading pretty close to basically a support zone over here. You know, it goes a little bit against how I trade, especially when I see a support so close. But it's trading. You sometimes you jump in, even if you think you're not right, because I'm sticking to my trading style, my way of trading. All right, so I stick to it religiously. If it doesn't work, it doesn't work. Remember, you don't win all the trades, but that's it. Okay, it's the end of my speech now for you guys. I'm not gonna keep you guys up all day and all night. For the gold so far, I'm just gonna. You see, it's at the support over here, and it found support. So where's the previous high? Yeah, you can put a buy order in here, and hopefully it gets to the top there again. But you know, it's not trading. That's just gambling, because nothing tells me that it's on its way up. We're still in between this ranging market. So if you go down, this is the 30-minute time frame. So if you go down to the 5-minute, if you are a trader that trades on the 5-minute, you know, quickly in and out the markets, a scalper like they call it, or a sniper trader scalp, then, you know, on the 5-minute time frame you can do exactly the same thing, where you mark out the previous high, and once it's broken, you wait for a second run, and on that level over there, let me just get a thing there, and on that high you would put a buy order in there, because that's the one that broke it. That's the second run. You put a pre-order in there, so you would have been in the market. You would have been in here. You can, but I don't like trading, you know, on the 5-minute or the 1-minute time frame, because I don't sit in front of the computer the whole day. You know, I've got a life to live. I don't sit in front of the computer the whole day. I'll maybe have a glance at it, like, you know, 3 or 4 times during the day, just quickly have a check, but I don't trade any other style that I'm trading. So yeah, anyways, that's mine. Share this video, please like, subscribe, and yeah, I hope to see you guys tomorrow at 8 o'clock, and let's see what the market does. Yeah, we'll just have a look and see. From my side, have a good one. Good. Cheers. Have a good one.